Vikas Khemani joining in from Carnelian Capital. Vikas, hi, morning. Surprised by what TCS and Infosys have managed to do? Just so beaten down in terms of sentiment, and even an inline set of numbers or a slight beat is what the street gets impressed with.
I mean, you know that. I mean, we've been quite positive on the IT sector for quite some time, and we have never been perturbed by quarter on quarter. As long as we believe that there's a long-term trend which is in favor, and I've said in our past interactions as well that we are positive on IT, and I think the execution cycle will only pick up. And I've again said that IT is the best trade on interest rates coming down in US. The developmental spend will come, and as the execution accelerates of the order book, growth will come, and that you will see, in quarters to come, only getting better.
Okay, fair enough. Vikas, let's get in your sense then, overall, in terms of the fact that it is an election year. We have, as well, last year had pretty much all of the pieces that were put into place when it comes to the overall macros, the earnings season. How is it that you're expecting the year to pan out, in particular with the Capex related theme being in the spotlight on the back of elections?
I think, I really don't think, elections are as important. I think the Capex cycle has been on upswing for quite some time, last couple of years, and we've been betting on that. Uh, of course, both private and public Capex is fighting, and that I think is likely to continue before election, after elections. So I think it's a multi-year theme. India is being rebuilt, India's capacities are being built, and whenever such kind of uptick happens, you see a multi-year cycle. So I don't think election is a very big play in this. And fortunately, this government does not also decide spends only around the elections. They have been spending right through last couple of 3-4 years specifically. So I think it's a multi-year trade, multi-year investment cycle.
Right, Vikas. I'm just looking at some of your holdings and Senco Gold that's popping up there because we've seen these jewelers actually doing quite well in trade. Whether you look at the new listed companies like RBZ, Moti Sons, even a Kalyan in terms of its Q3 update has been quite good. Do you see more value there in these jewelry retailers? Would you look at that bunch even more and closely now?
We've been invested in the company, and we see it's a fantastic company. It's when we bought, when it was, I think, very very underpriced, around 20 to price earning ratio, around the IPO when there were not many takers, and we've been holding since then. So we really don't necessarily take a lot of view on. I mean, it's not an industry view; it's a probably view on the company, and of course, discretionary consumer spending would pick up, is picking up. I mean, we've not bought many consumer stocks in last 4 or 5 years, but whenever we find an interesting, credible story available at a reasonable price, we would definitely buy. So this is one of those things.
Right. Vikas can't help but talk about the new theme which has emerged, or not new actually, but the dominant theme which has emerged on the sidelines of the Vibrant Gujarat Summit as well. And, almost to unichorus for renewable energy. How is it that an investor can best capitalize on this theme now?
I think renewable energy as a theme has been around for quite some time. India has been building capacity. India has already kind of achieved its targets 3-4 years ahead, and it's only getting better. The only thing is, I think there are not many investable plays in the listed space on that. But we have played the power sector through the thermal power, because we think that India is staring at a shortage of power. New capacities have come about, and so in India, I think. So over the next 4 or 5 years, we will have to build thermal capacity, and that is where we have played on that segment.
Okay, fair enough. There's also, Vikas, the view that, one should be looking at a bit of a defensive tilt, Pharma making a comeback, while yes, within FMCG, there could be a bit of a slowdown. But how exactly would you advise investors to position themselves within the entire defensives basket?
So again, we don't buy pharma because it is defensive. We bought pharma because I think it is growing. Pharma was, not going anywhere in last 7-8 years, except last 1 year or so. And we think that the 7-year cycle was over, and we are beginning to see a very, interesting trend developing in the segment, both from a US market perspective as well as the domestic market perspective. US markets are getting better. and expected to get even more better. So we think that that underperformance of 7, 8 years will catch up. So we are not buying because it is defensive. We are buying because it can grow, and that's where I think big money can be made.
Right. Vikas, in pharma also, would you look at the large cap pharma or mid cap pharma? A lot of names are that you would look at in that space as well right now, and any specific name you were considering?
So, I mean, frankly speaking, there is opportunity all across. You got to really look at business model. I mean, pharma is a very wide name, but each pharma company is a very different business model, different focus. So you have to really, see individual company very differently. You really can't broad brush decide on that. So it's really bottom up, and there is a value, there is opportunity across the spectrum, large cap and small cap and mid cap. So but it depends. We like CDMO space. We like domestic pharma. We like companies which have been exposed to US markets and have a dominant positions there and now beginning to get. We like companies which have specific new products coming and beginning to fire. So it's really not, you really can't have a one approach to in pharma. Each company is kind of very unique in that sense.
Okay, fair enough. I just wonder what the outlook is from you when it comes to the overall FIIs, because while we could characterize the year gone by as maybe FIIs remaining sellers, sitting on the fence, do you think that this year FIIs will make a comeback in a big way? And if not, would that be a concern?
I have no doubt on that. There will be very big money coming into Indian markets. We have spoken about in the past. FI flows is very directly linked to the interest rates going up and down in US. We saw a lot of outflow when the interest rates were going up. Last year we said interest rates peaked out, and hence, you will not see outflow. But for inflow to come, interest rates will have to come down. And we already have sort of indication that, from Fed that 2 or 3 rates would cut might happen in calendar 24. That itself sets the pace for or the direction for FI flows to come. And secondly, I have a fundamental belief that India is one of the most promising market in the world. And today also India is significantly underrepresented in global portfolios. So both these trends would get corrected as this cycle turns, the tide turns. So I do believe that in next couple of years, including calendar 24, we will continue to see massive flow coming from FIIs.
Vikas, just looking at two individual names, and you can surely, skip to comment if you wish. HDFC Bank and off late even ICICI Bank. I mean, HDFC Bank has been one of the stark underperformers and one of the most disappointing stories. Hasn't really seen the light of the day, and off late even ICICI Bank has gone into some bit of a limbo. What explains the underperformance from private banking as a lot? And I'm going to miss out on a few large exceptions here, sporadic moves by an Axis or IndusInd, at a time when end of last year everyone's consensus call was that FIs are going to come back, money is going to flow into private banks at large are going to be the best rate for 2024.
I think we have taken slightly different approach. We've of course played ICICI Bank in last 4 years. It has become almost 3.5, 4x for us. We've been very big believer on that story. We never bought HDFC Bank because we believe that HDFC Bank might get derated. I mean, it's a fantastic bank. There's no question on that. Of course, but it's going through its own transitionary period. So might see some more underperformance continuing. But in general, I think somewhere middle of last year, we pivoted towards PSU banks because we think there's a big transformation happening. And as a result of that, we believe that PSU bank as a basket would outperform the private sector bank. And it is very natural for something like ICICI Bank, which has become 4x and everybody owns it. So to consolidate for a period of time. But I have no doubt that banking as a segment will do well because there's no way India can get built or India can grow without growth in the credit and large private sector banks. So I think the entire banking basket would do that well. But I think from a medium term perspective, probably PSU banks might deliver better returns.
Right, Vikas. There's one sector and one specific part of the sector, that's the two-wheeler space, that's been holding on to very good gains as well for the Bajaj Auto, TVS Motors, Hero Moto. Do you think that is something one should look at in terms of overall? Do you find more value in two-wheelers versus four-wheelers?
I think my entire auto basket, if there's a growth coming in the entire basket, and and we've been significantly overweight in the auto space. We own M&M, we own Tata Motors, so We used to own Bajaj. I think in one fund we own Bajaj Auto as well. So I think, we like the entire basket in that sense because, it again cannot happen that infrastructure is getting built, roads are getting built, consumption is getting increased and auto not do well. So it has to do well. And I think that story will continue. And at least in next couple of years, and we'll have to see, keep revisiting, but we are right now positive.
Right, interesting. Vikas, the other thing, of course, is, at large, because the mid and small caps have run up the way that they have, and a lot of pockets there are getting frothy. Now, I know you have to get into case by case scenario over here, but would it make sense to tactically have a larger allocation to large caps at this juncture?
Really depends how what kind of investors you are, what your time horizon is. Can you really make those changes? But yes, there are some large cap pockets where there's a value, and if the FI flow comes in, large caps will lead the way. That's a very very par for the course natural phenomena. So in that sense, you might not see this kind of underperformance which you saw in 23 in large caps. And of course, no doubt that there are pockets where there's a froth in mid and small cap. So to that extent, it might get corrected. But the way we look at is that when you buy in small and mid cap, you buy them for many years. You don't trade in, trade out. So our approach has been buy good quality companies, good in the middle of mega themes or good themes. Run by great management and sit on them for 5, 10 years as long as the story continues. And if it brings a couple of quarters of here and there underperformance, we are okay with it. But yeah, yes, people who look to do tactical allocations, I think it can be done because I think 24 can be a decent year for the large caps.
Okay, Vikas, great to have you on the show. Thanks as always for taking the time out and speaking with us.
Thank you. Lovely talking to you, and thanks for having me.
Okay, that's the